The last 24 hours has seen a lot of red across the altcoin market. We're also hearing headlines of the bubble bursting in the stock market, along with DeepSeek breaking down the trend for Nvidia. So Nvidia's also seen some pretty significant drops. Along with that, the favorite Bitcoin stocks are not performing here, putting in lower highs while Bitcoin remains at all-time high prices. So are we seeing further red? Is it going to be more carnage? Is the bubble beginning to burst here? That's the question that we're answering in today's video. Make sure you subscribe. This is your home of macro cycle analysis. Each of the day's analysis builds upon the previous day, and hit the like button if you're enjoying the timestamps. Yes, I've been putting those in. I've heard nothing from you guys. So let me know in the comment section and the like button if you want to see more of those. Click that thing right there. Okay, we also have our 4th birthday sale on for TIA Premium. If you want to go further with your trading and investing, now is the time. This is the best sale you're going to get on this side of Black Friday. Link in the video description, name, email address. It is on now. Plus, you could also get the bundle for TIA Indicator Suite. More on that later in the video. Let's kick it off with Bitcoin and some longer term updates here. Some of the analysis that I've been putting together this morning. I will be doing a video outside of the office eventually when I get these microphones working. It is a stunning day out there. So BTC rejected off the 50%, $103,500. That's where we are right here. And the day before that was obviously some panic selling into this low of 97,700. From this point, overall, the too long didn't read this early in the video is that I think we're going through a bit of a grinding process here before we see some significant moves to the upside. That has obviously been the case for the last couple of months. I don't think the cycle is over. I've been saying that now for years. You see the headlines over and over again. I see it on many other channels where you get a day down and the investors and the hedge fund managers and the analysts and all these sorts of guys come out with more headlines that, the bubble's popping and we've just been destroyed by DeepSeek and so on and so forth. This is the same shit that I've been seeing for years upon years now. And I don't think we're quite there yet. And I've got some other charts to get through in a second. What would make me change my mind is a breakdown of $74,000. And we're pretty a long way away from that with plenty of support to the downside. So if this is still a grinding process up here and we still see further downside, even levels to $79,000, $78,000 is not the end of the world, but there will definitely be some panic selling going on at that time, especially for BTC, which is pretty much my main conviction at this point. Now, the fear and greed index remains at greed at 72. Yesterday was also 72. Last week was extreme. And apart from that, it's basically been sitting in this greed. The worrying sign there, at least for your longer term players here in the game, we take a look at the fear and greed index that I had up the other day here. And this particular chart here is showing a lack of interest in the market at these higher prices. So as I said, for the too long didn't read, I don't think the cycle's over, but I do suspect if this continues to wane out here, we will see some further downsides. So what's happened in the past every other time, if you can't bring more people to the party, well, then the party's over, at least for a short term, until you can bring more people to the party. That's my analogy for today. So if that doesn't occur here, if we don't continue to see more people come to the party, or at least more excitement come into the party, and if those same people are putting more money into the market, well, it's pretty obvious you're going to see further downside from this point. And this particular chart here, this particular indicator of ours, well, if I can bring it up there, Crypto Fear and Greed Index, has shown this many times before, where if you get this waning of interest, eventually things start to roll over. 2024, it was lower highs, and the party came to an end at some of these panic selling moments in May and in July and of course August, with the higher low in September. The interesting point about that, which is something that you must be aware of, and I say it to myself as well, which helped us at this March low, is the price is a higher low, but the fear, at least around the socials, and especially if you sort of follow some of those headlines from like news report channels or investment channels, they're interviewing people about what they think the position of the market is on, you'll see headlines at that time almost worse than at the lows. That happened in March 2023, higher low. That is telling you that the smart money is actually buying up on that panic fear, on that panic selling day, and you get some pretty significant panic selling moments. I think we may have seen a slight one here the other day, especially with the deep seat going on, and we saw one the other week there on the 13th of January. Plenty more of those coming up in this cycle, as is shown on this chart. So this one here is a look at the Bitcoin cycle overall, basically all of the cycles throughout history. And what I've done is basically broken them down from lows to the highs, counted the days in them, and then the highs back down to the lows, counted those days as well. You may have seen something like this several times before, but what you might not have seen is a count of how many days potentially are left in the cycle. So what I wanted to find out when I put this together is roughly how much time is left. Sure, it could have been the end 2 weeks ago, right? No one knows for sure. No one knows what's on this black side of the chart, which is why we have price levels and time targets that allow us to identify if we are going to see a change in trend. That's the idea about it, right? Because no one knows what happens on the black side. You're just assessing the probabilities of what you've seen before. And then with your money, you decide how much risk you're willing to take. I was happy to take a lot of risk down here underneath 30K. Others were happier to take more risk when it broke 70K. You know, this is just what happens in the markets time and time again. Anyway, point of this is the scale here. We're looking at the days towards the end of the move and how many times we've seen panic selling happen at the end. Now this box is representing roughly around 300 days from the top, working backwards, because where we currently are from this top, today we just hit 800 days from the cycle low. So this bull market has been going on for 800 days. Now from the low to the top is 791 days, which means if we take an average of the last few cycles, you're roughly at about 1100 days. You can see the cycle here back in 2010 to the top in 2013, 1148, 1068, and 1061. So somewhere around that 1100. 1100 minus 800 gives you 300. So I'm looking at a number here of around 300. Again, I don't expect it to work out exactly the same as this. Maybe it goes a little further. Maybe it punches on until early 2026. Who knows? No one is expecting a 2026 top. Everyone thought it would be an early top now. Or earlier in the day, they thought it was going to be a late 2025 top. So who knows for sure. But if we're taking just a rough sample of what happened last time, you can see multiple times through that last sort of 300 or so days of the cycle is multiple panic selling time. So I think now is a time where there's going to be a lot more volatility. We're going to see more of these periods in the market that basically scare a lot of people out of positions. But there are also going to be times, which is hard enough as it is, where there are serious times that need to be taking profits. And I think these sort of rounded tops are a good idea to take some profits, even if the market goes higher. At the end of the day, the idea is to have some money so that you can come back and reinvest that cash later on in the cycle. Whether it's with Bitcoin, whether it's with your altcoins or your stock portfolio, that's entirely up to you. At the end of the day, it's your money. Now, going back to the previous cycle, we saw one panic selling event. This one here, I remember clearly, that was basically when I got into BTC. It was through this period here. That was when China was banning Bitcoin. That was all the rage through this cycle. Whenever China was banning Bitcoin, we saw a pullback with BTC. We had another couple of panic sells through May, and then again through this entire period. So you can break this down into once and then twice here. Another swift pullback, but basically it came back again in September, then again in November, then a day in November at the end here, and then basically towards the peak. So there were still multiple occasions of these panic selling moments, although the market kept going higher. One big thing I broke it down to is that we didn't break down from key trend changing signals. Many of those were at 50% level, so looking at that entire range, and through the middle, 50%. So you can layer that on top, plus the swing indicator. So you can see here, it came right up, back down, held the line, and then pushed higher again. Same thing happened with the next one. Came back down, tested the 50%, and came back up. So basically it was balancing out price throughout the entire bull market. Now, it didn't break down key swings either until it got towards the end, which let us know the major trend is changing. And on top of that, we can add in our overbalance in time and price. And so we haven't seen any of those things this time around this top yet. There's no overbalance in price, no overbalance in time, no breakdowns of significant swing lows, which would be back in this zone here between 50 and 70K. And the 50% level is still intact, which is what I looked at in this chart here. So the 50% back down at roughly 79,000 just for the current run up. And if we take the entire bull market range, well, that then sits down at 62K, so somewhere at 62, 63. But one thing at a time. We've got the lows here at 90s, we've got the lows there at 79. So I'm chilling until there's actual real evidence that we should be fretting the end of the cycle. So that's a look at the last two cycles there, and then going back to the third cycle, there were still multiple times here. Big flush out, panic selling, more panic selling, more panic selling, more panic selling. Again here, and towards the end, you had a couple of big days into the peak. 1, 2, 3, 4, 5, 6, 7, 8. So there's still likely in these last maybe 200, 300, maybe it goes longer, 400, 500 days, many times with the panic selling that don't necessarily break down key macro structure. And I think that's the important point here, is that we haven't broken any key macro structure yet. As I've looked at with the fear and greed index, in terms of sentiment, things are still on track. And I guess, I'm going through this a lot more now because the fear and greed index suggests that there will be some sort of pullback, whether it's February, whether it's March, I don't know, because what we're looking at is from the previous cycle here. It could come over this period, but unless it takes out these key macro levels, then it's all part of that fear that the market's designed to do, right? It's designed to continue to bring that volatility, and of course it'll continue to bring in the panic selling. So if you're in a position where you freak out at night, where maybe your portfolios are too heavily positioned in altcoins, whatever it might be, make sure you're in a position that if those events occur, that you're not going to freak out, because at the moment there's still no signs that the cycle is over. Speaking of which, I think it's a good point to have a look at the traditional markets. Less than a day to go, and we have the FOMC meeting coming up. So one could argue, well, the markets are just going quiet until we get the decision from the Fed. But I would argue back, if the forecast is 4.5% and the previous is 4.5%, and we still sit at 4.5% for the US, federal funds rate here, and the actual turns out to be 4.5%, then what was the point of sitting around? Like, why is the market still sitting around? Are they waiting on a cut? Are they waiting on a hike? No. The market expects there to be no cut this meeting or next meeting, getting closer to it in the May meeting. They're expecting a cut in June, but of course, the further you go out, the less likely it is to happen. So it doesn't look like they're looking at any sort of cut for this meeting that's coming up in less than, I believe it's less than 12 hours. So there we go, 17 hours to go. Okay, over to the stock market. And one thing I forgot to mention in yesterday's update was the pullback filled in our price and volume signal here. So to note, what I've been talking about is when you see the stock market rising, the price rising on decreasing volume, generally you will see a pullback into that zone where the volume was light, yet the price was rising. So it's kind of like a volume fill of price. One of the most recent examples was back in October, basically the entire month of October. It was rising here relatively weakly, and then came back and filled in all that price area with more volume to find out if the buyers are going to support the market. This is what I was talking about over the last couple of weeks. I was watching this rise. Sure, it was going up. It was hitting a new all-time high. The AA investors were getting super bullish at the top, as they always do, and super bearish at the bottom, as they always do. This data goes back to 1987. And then we had this day, like out of nowhere, fills in most of this price action to the upside, which happened on low volume. So whether this is over is yet to be seen. Maybe we keep coming down and flush back into this price zone. Again, the point I'm making here is that I don't think the game is over just because we saw one day down and then a reversal the next day from some news that came out of China about DeepSeek. That's not going to collapse the market. Sure, we could have a pullback into some healthy correction support areas like 5,600, maybe 5,800, but it's not going to be the thing that breaks down the market. I'm happy to say that out in public, screenshot it, record it, post it all over X. It's definitely going to help out the channel in these quieter times, right? But DeepSeek coming out with whatever they did, making AI, machine learning cheaper than everyone else in Silicon Valley is not going to be the thing that crashes the market. The thing that crashes the market, as we've talked about for years on the channel, is when land prices start to come down, and they start to come down in a big way. And it doesn't look like that is happening as we still see the financials pushing to fresh highs. Now, sure, this could pull back, but there's still a lot of strength in the financial market overall. This is the financial sector of the S&P 500. Home builders still looking all right, might be a little bit of a pullback here. And as for the NASDAQ, which of course is more heavily weighted into the tech sector, had a reasonable day up there. Still hasn't confirmed whether it's out of this mess yet. But again, the whole point I'm making here is for quarter one, it seems like there was going to be a mess. I talked about this a month ago, that it could be a bit of a mess. I didn't know how bad it would be. This doesn't seem that bad overall when you look back at it so far. There's still plenty of support to the downside, still 19,900 points. So even if we were to see this continue on, it's really a balanced, healthy correction at this stage. Another interesting one here, before I get onto the cryptocurrencies, I've got 1, 2, 3, 4, 5, 6, maybe 6 or 7 cryptos to get through there, is a look at the producer price index. This one here is about inflation. So I've been making the point now that I think inflation will come back. I don't think Trump's going to fix it. We're getting into a really weird phase of the market where you talk about anything to do with politics, you mention a name, people get really triggered and they think you're against their person. And the difficulty at this stage now is that people want you to take a side, and that's where things get dangerous. If you have to take a side, that's dangerous for everyone in the world. I'll leave it at that for today's video, but you should be able to talk about the markets and what these political figures are doing, because essentially it's about making money here. So what they're doing, where they're going with this thing, who knows, right? But if you can't talk about it from a point of view of these markets and whether they're doing something, say, wrong in your opinion, then there's bigger problems in the world, which I think many of us understand. Moving on to this inflation data here. Inflation remains a hot topic among investors and consumers. Sure, still objective indicators suggest that inflation at the moment should not be a significant source of concern for the stock markets. Okay, why? Well, in this piece, we review updates several previous reports on inflation and assess the current state of affairs, the state of the producer price index. So essentially, I'm not going to go through all of this. We're just going to look at the results on it. We see the producer price index by commodities. I've talked at length about why I think commodities may continue to go up in this stage of the cycle, even though whatever Trump tries to do is not really going to make any difference here, and whatever Trump tries to do, it's really not going to make any difference to the cycle. We're going up until we don't. The PPI stock market model, we're looking at indicators here for bullish and bearish signs, and then you can pause this if you want, have a read of the different indicators. But essentially, when we look at the results overall, a summary of the performance, once you see these signals, here are the results. There are a lot of signals. The table below shows the Dow's performance during favorable periods and unfavorable periods. So that's a buy signal occurs at the end of the month in which the model rises from below +3 to +3. A sell signal occurs the opposite, right? So we've seen this signal, it's saying the signal comes up since the buy signal on the 22nd of December, the 31st of December, Dow gained 34.4 points through the end of December. Dow performance during buy signals, 16 times up, 1 time down. Huge percentages here. Percentage of times, 24 up, 11 down there. Percentage of times, that would be 70 to 30. Average percent is 76. Median percent, 22. Max percent, mental, 1,058. I hope I'm reading these numbers right. So essentially what this is telling us is inflation can impact the stock market dramatically. However, for investors, the real key is to assess the current state of inflation undramatically. So to basically remove the emotions from the game. Headlines, narratives regarding the inflation are typically intended to generate an emotional response, and it continues to do so, and it will forever. The trick is to examine the data as objectively as possible. The reality is that many forms of inflation, rent, food, example, remain challenging for many consumers. However, our objective here is to not assess the impact of inflation on the man in the street. Obviously, that's what we try to do every day here, but rather to determine the likely effects of inflation on stock prices. And I suspect we're still going to see those go up. Of course, take the reading here. It's not just basically based on one signal alone, but we've obviously been adding in many, many reasons why we're still on the bullish side of the market. We still think the markets are going up from this point because we haven't seen any reason not to believe that they would continue up from this point. Speaking of which, let's have a look at some stocks which aren't going up at this point. In this case, it's MicroStrategy. Now, I've talked at length about this on the channel. Hit the like button if you want to see more about this. And of course, like if you're enjoying the timestamps down below. It's a lot of work, but anyway, we get there. The way this is set up, the way Michael Saylor has set MicroStrategy up, the structure of it, does not mean that it must go to new all-time highs when Bitcoin goes to new all-time highs. The investors can sell off their bonds for stock, sell the stock, take profits, whatever they need to do, right? You can look into that in further detail. And what we're currently seeing is another failure at 50% here. It's at 365. The flip side, still seeing higher lows. So it's not the worst thing in the world here. Possible to still see further upside, higher highs, higher lows, and ideally a consolidation above 365 in order to get back to the 450. Through this entire period now, over the last 2 months, that has been the key number there, 450. This is the previous top here, then the next lower top. 450 is the game for MicroStrategy to get above in order to take out this previous all-time high. That's sitting at around $543. And that goes before any stock splits. I know Saylor has talked about splitting the stock here many times before, but let's see what can happen. As I said, good news, it's above the $320 low. The higher lows are still there. And now it's in rock and a hard place, basically between 365 and 320. All right, time for cryptocurrencies and the total cryptocurrency market cap. Now, we've talked a lot about, say, panic selling and some of the signs there of the selling getting panicked. August low is one there. I'm not saying this because I'm immune to it. It happens to the best of us. You know, this is just what happens at those times. And if we can continue to identify them, because you never see what's on the black side, right? This is all you see at the time. You just see major red going down. Could it be another day down? It sure could, right? Like here, like here, like here. You got 1, 2, 3, 4, getting to these big days to the downside. But then eventually it turns around, especially if the market's still in a macro uptrend, which is why I focus so much on looking at the macro and of course traditional finance to help us out with whether we remain in that broader long-term uptrend. As we looked at chart here, 10% of the time it moves, 90% of the time it's sideways, and at the moment we're still in a pretty significant sideways pattern. You could argue going back to late November, early December, of course. Good news, still above many of these levels, $3.37 trillion. I dare say we're getting very close to breaking down this speed line here. So this is the total move for the crypto market cap from September into the March peak, and that's where it would end there. If it got to 3.43 trillion next week, I think around the 5th, 6th or 7th of February, that would be the exact same move that it did last year. But yeah, if it breaks down from that, we'll be looking towards probably 3 trillion, maybe somewhere down to 2.7 trillion. But for now, it's still hanging out in a consolidating pattern at all-time high prices. And I say all-time high because it's above the previous all-time high. And at the moment, it still remains in a trading range above these prices. Over to ETH, and over the last 24 hours, ETH actually did break down and close at its lowest level, going back all the way now to middle of November. So it broke down from the 50% extension. It broke lower below the 50% range of this entire move out of that August low, and on the verge now of testing that $2,900 level. As we've been talking about, if ETH was unable to reclaim that 3,500 zone, which is the 50% level, then it's likely going to come back and test the $2,900 level, right? So 2 days ago, it got to $3,020, $130 odd away from that next level. So ETH very much in a weaker position here. Solana, last 24 hours as well, also broke back underneath the 50% level, so unable to hold $232 for now. Sure, it could go on a bit of a flip here, but the last 24 hours has shown the weakness, and next levels below, you're looking at around $220 again, and below that you're looking at $200. Now I've just got a couple of notes here on the chart, just looking at that panic. You got the panic selling, but you also have the panic buying, which of course people refer to as FOMO, getting FOMO into those peaks. And the market dislikes both of those. You get the panic to the downside, usually there's a bit of a bounce back. You get the panic to the upside, FOMO, then there's usually a pullback. And so far, it's filled in the entire panic upside. That was Saturday the 18th, Sunday the 19th, leading into the inauguration day. So the market went ballistic. You had the Trump meme token, obviously the inauguration, things went wild. And people thought, well, this was my last chance to get into Sol, pumped it right up, huge volume, massive reversal day. So you're basically looking at a bit of a topping sign there for now. Solana still holding up relatively well, but in the short term, that's what's been going on. It's coming down because there was just way too much panic in these last 2 days, and then we're coming back down to settle again. $200 is going to be a key level for this market because of that major 50% zone, and ideally not testing this previous panicked level at around 170. So for the short term in Sol, week, you got lower highs, lower lows, retest of the 50%, and the diagonal here. Therefore, it's obviously weaker, and the lower close as well. Needs to get back above 23, and of course the diagonal. The diagonal comes from this entire range. So there's basically run a line through this whole consolidation. It's broken down once, got back above, and right now it's on the way down again. XRP had a bit of a panic sell-off there into 260, and then a buyback, rejected again, another one, rock in a hard place between 290 and 320, slightly stronger position here. However, you get another failure at that 316 to 320 level, probably going to come back and test 290, probably going to come back and test some of the other levels. Ideally, you don't want to see it go below 260 again. That's where the previous low was, and that's where those previous tops were. Weakness forms once it breaks back underneath those levels. XRP BTC, this is something that we had drawn on the chart going back into December, looking at if there was going to be some strength or weakness for XRP versus BTC. And so far it's failed once at the 50% level. So that's this 3,200 Satoshis. Looking to attempt it again. So far, lower highs, lower lows. It's back underneath the previous top. That's at the 3,050. And for these tops here, basically around that swing low, you're looking for at least a hold above 2,600 Satoshis. So break under that level, probably going to test some further downside support, somewhere around 2,200 down to about 2,000 Satoshis. So keep an eye on that if you are a long-term XRP holder, only just breaking back into some profits here. Ideally, you get this thing holding up at around 2,600 to go on and burst through and hit your 4,000 Satoshis, hopefully make you a few more bucks. Sui didn't do it. It made it yesterday, or 2 days ago, and then fell back below the $4 level. So it wasn't able to hold that. You had a fair bit of volume holding it up just 2 days ago, and basically it's broken back down. This is something that we've been covering now for weeks on the channel, looking at the weakness forming in Sui from the top. Remember, no one has the crystal ball, but those signs weighed up, telling us that the probabilities were likely this was going to be some sort of top formation. Whether it was short-term or long-term was yet to be seen, but it did seem like we were going to get a breakdown soon. And now we've had an average breakdown, so 35% into that low, without any signs of it bouncing back at this point to get back to that sort of $5 or so. Next levels of support, if it breaks here at 350, I'm looking down towards 290 to $3 here for Sui. Doesn't mean I think the game is entirely over. It might just be going through something like we saw back in 2024, where it just goes on this long move to the downside. People get sick of it, they get bored, panic sell, leave the market, and then out of nowhere, you get this nice, beautiful 10, 11x move to the upside. And that would go in line with what I think is happening with the market in this Q1 stage. Now we're bringing back an old faithful here, Cardano, ADA, as it looks like it's maybe attempting some sort of consolidation above roughly 80 cents. And I'll be looking anywhere down to about 65 to 70 cents for any sort of pullbacks and consolidation. This one was brought up in our community, a community of traders. They're short-term, long-term, And I guess there's a great segue into TIA Premium. There's obviously a sale on that, as I mentioned earlier in the stream, and it's actually on now. Click the link, you got the name, email address, subscribe to that, and you'll be notified about the sale and the coupon codes. Big sale on with that right now. Best sale you'll get outside of Black Friday. Along with it, you've got the indicator suite if you want to grab the bundle, as it's all bundled in together now. So this one was an interesting one that was brought up by the members who were trading this actively as a possible consolidation zone. So I'm looking, as I said, somewhere down to around the mid 60s if this is able to hold. And if so, then we might have this bit of a move up to some highs again, 130, back to around 170. Ideally, if this is all part of a major consolidation across the board with altcoins sometime into 2025, then I would be looking for a bigger move to the upside here. Remember, if these things, if any of these altcoins, maybe I'm not talking about your altcoin, but I'll talk about my own. If my altcoins fail at the 50% level, then I would most likely be dumping them. So talking about it from my perspective with my own altcoin portfolio, if the altcoins fail to take out the 50% level, whatever that might be on my individual alts, because of course it's not going to happen to yours, then I'd look to get out of these altcoins, especially with how far we've come in the cycle. As I pointed, as we've been looking at earlier in the video, looking at the overall cycle here. Maybe there's 200 to 300 days left. Maybe we get lucky and we extend out another 100 or 200 days into 2026. Then I would really be getting a little cautious and looking to protect any sort of profits that I've made in this journey, or maybe have to get out at some sort of break even because it just was not able to crack the almighty 50% level. And the last one here is PEPE. Look what happened when it just hit that 50%. We talked about this on the channel before this occurred, coming down to test the 50% on the 23rd of January last week, ran up and then failed from that point. And once it fails at these 50%, usually, not always, but usually it comes down rather quickly. And you can see there over those last few days, it's come down relatively quickly. From the break of the 50% to the lows, there's 22% in a matter of 48, 60 hours or so. So keep an eye on those 50% levels in case you do get that failure over this next stage of the cycle. Now, the last thing I'll mention with PEPE is the averages here for the drawdowns, sort of mid 60%, takes us down to the line here at about 900. So I'm keeping a watch out for that should this start to accumulate again. And meme coins go ballistic yet again. That's it for today's video. Like, subscribe, birthday sale is on now. I'll see you guys back here at the next video. And of course, like it if you've enjoyed the timestamps down below. Until next time, what am I doing here? Take care and peace out.